Hi everyone, my name is Sukirat. I am the Executive Director and Chief Revenue Officer for Sunoida Solutions based in Dubai. Sunoida specializes in providing consulting and solutions for the banking data analytics in emerging markets. For the past 2 decades, I've lived in New Jersey and Dubai and helped banks across 40 countries, including many banks in Africa, in their data analytics journey. Let me start with one of my favorite quotes from Jeffrey Moore, the famous American consultant and author, who says, quote, "Without big data analytics, companies are blind and deaf, wandering out onto the web like deer on a freeway." I often use another similar analogy with many banking executives. What you're seeing on this slide is a cockpit without any functioning console screens. So the pilot has no idea about the fuel, the altitude, the wind speed, the direction, and hundreds of other readings that he is used to while flying. In my many interactions with banking CEOs about data and analytics, more often than not, they tell me that they already have invested a lot in BI or data analytics, and they get many reports. But when I ask them, do they get an automated daily dashboard about their bank's performance and analysis by branch or product, relationship managers or segment, channel, or customers, most of them are very candid and say no. There are a few who say they get it, but either it is not daily or it's not fully automated, which means someone has to do manual number crunching at month end to prepare the dashboards or reports. It does not have drill down options for detailed analysis, etc. Because in my opinion, data analytics is not only about what you get, but also about when you get it, how accurately you get it, and how you get it, which means if it's fully automated or semi-automated or manual. The critical factors for a success of data analytics is that it should be easy to understand, accurate, timely, and fully automated. In the above example, there is no use if the information about the fuel or the altitude, wind speed, direction comes to the pilot after he has landed the plane. Similarly, to manage a bank, you need analytics on all key parameters on a real-time basis rather than waiting for month end, so we can take proactive decisions and change the outcome rather than do a postmortem at the end of the period. Manual number crunching brings me to another of my favorite quotes from famous British economist Ronald Coase, who says, "Torture the data and it will confess to anything." The problem with manual number crunching in Excel or any other reporting tool is that more often than not, the person preparing the reports or analysis already has a version of truth that he or she wants to report, and most of the times they work backwards to prepare the same. That is why automation is key here. The fact of the matter is that we are producing a lot of data today. Eric Schmidt, the ex-chairman of Google, said a few years back that there were 5 exabytes of information created between the dawn of civilization through 2003. But that much information is now created every 2 days. And this quote is a few years old, so today it might be even less than a day. But the irony is that the large amount of data produced is not analyzed by key decision makers. Some studies reveal that less than 5% of data produced by organizations is actually being analyzed by the key decision makers. So the trillion-dollar question is, how do you build a successful data-driven bank? In my view, there are 5 key pillars for a successful data analytics journey for a bank. Unfortunately, most people, when they think of their data analytics journey, they focus too much on the last pillar, which is visualization and reporting, and also on artificial intelligence these days. However, both of them will not yield any results if the first 4 pillars are not addressed appropriately. The first one is data sourcing, which includes your data sources, including structured and unstructured data. The second one is data quality. I can't stress enough about how critical data quality is, including master data management, data governance, and data enrichment. In 2018, based upon a survey by Gartner, organizations estimated that poor data quality alone costs them each an average of $11.8 million per year. Now, data quality is a big challenge because of three main factors. Number one, because banks fail to measure the annual cost of poor quality data. Number two, banks that recognize the cost and impact of poor quality data often find no clear way to fix the problem. And number three, the cost of data quality tools remains a challenge. So banks need to use cloud or hybrid models and maybe explore data quality as a service, which is available as an option today. Also, it's very critical to have proper data governance in the bank and master data management, especially related to the customer data. The third layer is your enterprise data warehouse, which should have a banking data model, since we are focused on banking. Because if you try to build from a generic data model, it could take you years just to make it banking specific. So there's no need to reinvent the wheel because there are many banking data models readily available. And also the data lake, which includes all your big data and social media and unstructured data. It can be easily handled and stored using the data lake. The fourth layer is your business rules, which has things like funds transfer pricing, allocation rules, your business drivers, your adjustments, budgets, compliance benchmarks. So if your solution does not have these, then you end up exporting to Excel and doing all this manually, which kind of loses the purpose of automation. And the last layer is the visualization. And trust me, most tools will do the job as long as you have complete, accurate, timely data available in a single repository. But that is the biggest challenge for banks, that how you get to a stage where you have a complete, accurate, timely data repository available at a single place, and hence becomes a single source of truth in the bank. We have also seen remarkable results in terms of ROI and turnaround times in banks, where the data catalog has been provided to business users with self-service enablement. And then the last piece in this journey comes AI, because for AI models to work properly, you need large data sets that are very accurate, else they will be very misleading and business leaders will see very little value in the results. In banking data analytics, the three key success factors are use case, and use case. Because without use cases, there are no goals, hence there are no measures of success. Board members and business heads do not understand technology, but they thrive on use cases, and that's what excites them. So my sincere advice is please don't spend millions on buying technology tools around BI and analytics in pieces unless someone agrees to deliver on a use case that you can relate to in business terms. I hear a lot of banking executives get excited about artificial intelligence, machine learning, big data, etc. And there is a fair amount of hype around this area because most banks are still struggling with their basic data warehouse foundation. Please sort that out first before you embark on your AI journey. Let me share a few specific use cases which many banks in Africa have benefited from. So one of my favorite use cases for banking for data analytics is revenue assurance analytics. Today, banks rely mainly on their core banking systems to calculate and book their revenues. But we all know that there are a lot of revenue leakages in a bank. It could be due to a variety of reasons, such as operational issues, technology issues, the customers are using multiple channels, so that could be issue with one of the channels. Unauthorized discounts and waivers are given by business teams. It could be because of fraud, etc. The telecom industry had invested heavily in this area of revenue leakage many years ago, but banks have still not invested in this area, which is pretty surprising, even though this is one of the few legitimate ways to increase a bank's profitability. Revenue assurance analytics can assist a bank by giving them daily analytics of where the bank is losing money. And in my view, it has one of the fastest ROIs available in any data analytics use case across the entire banking sector. Customer 360 is another very critical use case in the banking industry. Now, Customer 360 has been going on for ages, but according to me, it is still one of the most powerful analytics you can deliver to your business teams. Very few banks in our markets have a single unified view of the customer, getting information from 30, 40 different systems across all products, channels, segments, etc. And then to calculate the customer profitability by applying your funds transfer pricing and allocation rules in an automated manner. So you know whether you're making money from this client, and if yes, then how much, or are you losing money from this client? With proper master data management, your business teams will thrive and love you for delivering this unified view of the customer for their decision making. My last use case is around the use of artificial intelligence in banking. Now, most successful use cases in banking using AI have been delivered around controlling customer churn, since many studies reveal that retaining an existing client costs 5 times lesser than acquiring a new customer. And this has become even more critical post COVID-19. Other use cases where many success stories have been delivered for banking include NPA management, customer segmentation or hyper-personalization, customer lifetime value, and next best product recommendation. Let me share a couple of examples from McKinsey's report to highlight the power of analytics in banking. A US bank used machine learning to study the discounts its private bankers were offering to customers. Business teams claimed that they offered discounts only to valuable customers and more than made up for them with other high-margin business. The analytics, however, showed something different. It showed patterns of unnecessary discounts that could easily be corrected. After the unit adopted the changes, revenues rose by 8% within a few months. Now that is a powerful ROI. In another example, a top consumer bank in Asia enjoyed a large market share but lagged behind its competitors in products per customer. It used advanced analytics to explore several sets of big data, customer demographics and key characteristics, products held, credit card statements, transaction and point of sale data, online and mobile transfers and payments, and credit bureau data. The bank discovered unsuspected similarities that allowed it to define 15,000 microsegments in its customer base. It then built a next product to buy model that increased the likelihood to buy 3 times over. But like I mentioned earlier, building a solid data foundation is very, very critical to fully appreciate and benefit from your investments in AI. The 2 key takeaways I want you to go with today are as follows. Number 1, banks should really focus on the 5 pillars I shared earlier in order to have a successful data analytics journey. Most banks have gaps in their first 4 pillars, especially on data quality and business rules automation. Without fixing these, you won't get the automation and the results required for effective decision making. But the good news is, once you fix them, or at least get it above the threshold, sky is the limit. Because banks need this solid data foundation to compete effectively in today's times. Then you can really treat your data as an enterprise asset and use it for AI modeling, risk management, credit automation, and build customer loyalty while growing your business profitably. And number 2, in every aspect of data analytics, please work with use cases and quick wins. Without use cases, you will be buying a lot of data analytics related technology components without much business results to show for, and then when you look back, you'd wish you had started the journey with use cases. So to summarize, I would say the following. With the current global pandemic, the workplace has been disrupted like never before. Banks have had to find ways to adjust to a new normal, with reduced number of staff working from different locations to maintain social distancing. But at the same time, you still need a 360-degree view of your bank at your fingertips, including the performance of your branches, RMs, segments, products, channels, customers, and also ensure regulatory compliance. Economies have slowed down, and this unfortunately includes the banking sector as well. The result has caused a direct impact on the bank's profitability. As a result of this, the need and criticality of data analytics in banks whether it is revenue assurance analytics, customer 360, or reducing customer churn, has been made very clear to every top banking executive. I hope this has been useful, and I wish that you really enjoy your data analytics journey because it's an exciting place to be even in a pandemic. Thank you.